Hi ladies and gentlemen, this is Game of Trades, and today I'm going to start off the video by quickly talking about crude oil. As you probably know, we've seen a massive, absolutely massive drop in price of crude oil. It dropped down to $0 a barrel. So I'm going to quickly touch on how that's going to affect the economy from a fundamental standpoint. And to put it simply, the US is an absolute huge oil producer. Absolutely huge. There are entire towns in the US, entire cities that run completely on the oil business. So seeing this huge drop in price, absolutely massive, let's say from the top in beginning of 2020 to where we are now, that is a 80% drop in price. And so this drop in percentage is exactly proportional to the revenue of these oil businesses. And so these people are going to see an 80% drop in their revenue. This will cost absolutely huge amounts of job losses. Entire cities are potentially going to go completely bankrupt. And so again, the government will have to step in and pay and try and bail these people out. And so this is just one more thing to add to the entire list of problems we have from a fundamental standpoint. This is not good news, guys. Absolutely not good news. Whether we see the consequences of this right now or we see it later down the line, the conclusion is the same. It is not good. And so going back to the SP 500, this could definitely be that news catalyst that we were talking about in the last video that would spark the next leg down. And so I'm going to go back to the S&P 500 right now. And so you can see the move down has begun. But before I go any further, make sure to drop a like on this video. It helps out the channel massively. And I also want to make a quick announcement to my subscribers. There's going to be some changes coming to the channel. We've had a lot of demand for more content on different asset classes. So we have a team at Game of Trades of like-minded traders that are going to start putting out some bonus content on the channel for you guys. Now let's get right into it. We were looking at this wedge pattern for a while now. People were starting to give up on this wedge pattern, but you can see this is exactly what you want to see, exactly what you want to see with a wedge pattern. You want to see an impulsive break like this. Throughout the wedge pattern, you get a slowdown in the momentum towards the upside, and then you get a nice clean break of that trend line. And you can see what happened here is we faded the gains of these 1, 2, 3, 4, 5, 6 trading days. 6 trading days where we were going up. We faded that in just one clean break. And so this is what I was talking about when I said that the upside reward, the risk reward to the upside is very limited. We were seeing momentum to the upside was too low, and this kind of a move was too big of a risk. And so this was an objective trade. I said this in my last video. If you're looking at the hourly charts and you're looking for a break of this trend line, you can trade it down to where we are now. If you manage to do that, congratulations. And you can see here I added the 50-day moving average. We had a clean rejection off of that moving average. And you can take a look at 2018 and you can see we have that same rejection right here. We had the first leg down where we broke the 50-day moving average right here in one smooth cut. We then had a back test of that 50-day and then a rejection and a sell-off after that. And so that's pretty much what we're seeing right now. We'll see what this move down develops into, but you can clearly see this is a beautiful rejection of the 50-day. We had a first cut through the 50-day right here, and now we're back testing it and rejecting off of it in a very clean manner. Now, how far down is this move going to go? That's the question everyone's looking for. And to answer that, what happens today and tomorrow is absolutely critical. I think by the end of the week, we'll probably know the answer to our question. And that is very simply because of these 3 levels that I've put on my chart. I try to keep the charts very simple. We've got 3 levels, the 275, the 272, and this trend line here that goes back 11 years and that holds up the entire bull market. And so right now we're smack down in the middle of this entire support zone. The bulls will want to defend this level no matter what. If they do not successfully defend this level, we will likely see much more selling to the downside. And so if you are a bull, if you think the fundamentals of the economy aren't that bad and that we'll likely see another bull market, this is about the best price that you're going to get for the next bull market. This is right on the trend line, okay? And you can go back in history, we've only had so many opportunities to invest on that trend line. You can see we had one opportunity here where we had huge gains after that. We had one opportunity here with huge gains after that. Same thing here. So if you are bullish, this could not be a better opportunity for you. Now, obviously, you'd need to put a stop loss, a very tight stop loss, below this 272 level, okay? Because if we start going below that, that's when the selling will happen. And so that brings me on to my next point. If you are bearish like me, if you've been watching this channel from a fundamental and technical standpoint, I am a bear, then you will want to look for a break of this entire support zone. If you are already shorting above the 272 level, I can see that the price right now is at 273. So we're really starting to slice through all of these support levels. So this by the time I post this, we might be under. But if we're not, if we're above this support level, you should not be shorting the markets. This goes against every rule in technical analysis. You do not short at support. You could have shorted here because we were at resistance and we were overbought and waning momentum to the downside. This was an objective trade to the short side, but now it isn't. This is support. And so until we have a convincing break of this level, we cannot say that this is an objective short. That being said, I do favor a strong break of this support. I do think that's going to happen either today or tomorrow. And so I am very much ready to expose much more aggressively to the short side. And that's when we're going to need a beautiful trading strategy to be able to trade to these support targets right here and potentially all the way down here and potentially lower. We'll see how things develop along the way. Now you can see again the MACD is starting to curl down. We've got the momentum waning to the downside, and if we break that support level today, a bearish crossover of the MACD is imminent. And so that will show us that the momentum is switching to the downside again. So you can see here we had momentum to the downside. MACD, the blue line is below the orange one all the way down, and then we switch the momentum. You have this entire bull trap here, and if we switch again, that's the next leg down. And so that's what I'm talking about this level. I know I'm insisting a lot, and I have been for a while on this level. If we break this level, every indicator will start to flip to bearish very quickly. And so the panic will start accumulating very quickly. You have no idea what the power of this bull trap is. How many long-term S&P 500 bullish investors were caught by this trap, popping back above this 11-year bull market uptrend line is a massive deal. And so popping back below it just a few days later is an even bigger deal. And so I said this back here when we popped above it. This is a false breakout. This will not last. And this is exactly what we're seeing now. We're seeing that this could not have lasted. And if we do eventually bounce, if we do bounce off of this level right here, we'll probably overshoot these highs right here. We'll make another high. And that's when the bull trap will really come. So until the fundamentals change in our economy, and until I'm convinced the economy is back on its feet, I will be bearish about this breakout of the 11-year bull market uptrend line. And so with this recent development with crude oil and entire cities potentially going bankrupt and needing to be bailed out, that just adds to my lack of confidence, of overall confidence on the US economy. And indeed, the Fed has pushed this rally up very high, but I think that when the tide turns and the panic starts settling in, people will sell much more aggressively than before. And I believe that the Fed can only do so much to push the stock market up. Now, again, I could be completely wrong about this. I may sound confident, and I am, but I could be wrong. And that's something you have to realize when you trade. Make your own research, always put your stop losses, and keep your risks low. Now, that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to like and subscribe if you haven't already. Also, make sure to put your notifications on. These are videos that expire fairly quickly, so getting that notification will help you get that fast update on the market. As always, good luck on your trading and see you next time.